Well, it gives me great pleasure to bring on board the top management of TCS to talk about how things have gone for TCS for the quarter gone by, how things are looking on the attrition front. The quarter gone by was a good quarter for the shareholders because TCS has now touched a market cap of $200 billion, making it clearly one of the most valuable companies not in India but in the world now. Milind, Samir, good morning to both of you and thank you for joining us. Milind, let me start the conversation with something which in a sense is of prime importance, which is occupying everyone's mind. While for the IT sector and for the employees of IT sector and for the shareholders of IT sector, the smiles are back. Companies are growing, dominance and agility has only increased, and the short to medium term outlook is looking bright. The challenge is on the wage front and on the attrition front, how are you managing it? Because with demand also comes scarcity of talent. And before you answer that, I can already see that Samir is, shaking his head. Looks like he's in agreement with me.
Yes, the job market is hard. Higher attrition is a concern. But the overall our employer brand coupled with our robust talent acquisition and talent development model, help us manage this supply side challenges much better. When you look at the hiring coming to backfill attrition from the market, yes, the cost goes up marginally. But we balance it with a good talent mix coming from the campus as well as from the market. And we've been able to do that in this quarter. As you can see, our manpower cost as a percentage of revenue actually has dipped by 20 basis points. So it's actually the proof of what we are trying to do here.
So Milind, what are the chances that you would be able to manage this entire uptick in the wage inflation stroke the attrition cycle? Because up until now, because of the brand and because of what you commit to your employees in terms of a career path, the TCS has got not affected. But given that the crunch is so strong and the crunch is also coming not only from existing IT companies, it is also coming from the startup world, that TCS also could be hit and the hit could come with a lag.
We have a robust model, like as I said, there may be, because of some short-term volatilities, there may be some blip here and there in a quarter or so. But in general, we believe in this model and we believe that we will be able to manage our cost, very, very well, like the way we always do. On a longer horizon, and because of the fact that we invest significantly in talent development, and it has been our core competency and a differentiation now in the market for many years.
Samir, we are going through a boom time like never before. We discussed the impact of wage and attrition, that is on the supply side. But on the demand side, are clients cognizant of compulsions which are kicking in? Are you getting a sense that the raw material cost in this case, which is wage and impact of attrition, is getting compensated and billing rates and margins are likely to inch higher?
What we see as supply side challenges are transitionary in nature, and we expect them to be short term. Our contracts with our customer are long term, and we don't foresee passing on transitionary challenges back to our customer. Our pricing has remained stable, and we expect our pricing and realization to remain stable.
Samir, so the trend which the management called off exactly a year ago, which is that things are looking up, incrementally things will look up. IT outsourcing is going through a major transition, a new architecture is getting created. Do you think somewhere your whole viewpoint on this entire cycle turn which you called has only got endorsed in last couple of days? Because if I look at the deal size, with each passing quarter, the deal size for TCS is only increasing.
Absolutely. So the trends that you are seeing in the market and the strong momentum we are seeing, whether it is backed by normal outsourcing deals or in terms of enhancement of digital core or in terms of cloud transformations, all of them are seeing increased demand and participation by customers. and that is definitely bound to continue.
But Samir, things are normalizing now, normalizing for the world. The third wave hopefully is not that strong. So a lot will also normalize for TCS in terms of the XGNA cost, in terms of the travel cost, in terms of whatever cost saving levers which in a sense you were able to adopt because of work from home. They may not be at play.
From an overall perspective, there have been savings in some of the discretionary costs in the past, but there have been offsetting investments, whether it is in terms of making our technology infrastructure more secure, more agile, or in terms of enabling various things in the new normal way of working. Having said that, the discretionary expenses also, as we have talked about, and I mentioned it in the last quarter, are seeing an uptick, and we expect most of the discretionary expense to get back to normal by the end of this financial year. If we look at expenses like travel, recruitment, as well as marketing, have already started seeing an uptick.
Right. Just to understand, Samir, also as a follow-up question, since we are going through what could be called as an extraordinary boom, and there is a big departure from the normal, what happens to the IT outsourcing cycle? Because typically our cycle works is that the Q3, which is the current quarter, because of furloughs and because of holidays, it tends to be a bit slower. Will that start normalizing now?
The way the calendar is spread out, seasonality is built in. Like you rightly called out, whether it's in terms of number of working days, or festival seasons, or furloughs to an extent, are bound to be there. Given, and as you also called out, the demand surge which you are seeing also remains. So how much of the incremental demand or the surge will be able to offset the seasonality is something which we'll have to wait and watch out for.
Then walk us through what is the update on the vaccine process. Last time you shared a number with us as percentage of your total workforce, how much is fully vaccinated, how much is partially vaccinated. And as big companies like Wipro and HCL Tech are ready to welcome a lot of the employees back, do you see a change happening there? Because one is getting a sense that the tolerance towards this virus now is far more resilient than what it was when it was detected, let's say, a year ago.
70% of our employees are fully vaccinated. 95% of our employees have taken at least one dose of vaccination. We expect to basically get to 95% plus number by the end of this month. Okay, so that is about vaccination. With respect to coming back to work, we strongly believe in 25 by 25 model, but we do not believe in 100% remote work. I said this earlier also. We will come back to normal first, and then we'll go to new normal. Let me put it this way. So we expect to. Most of our seniors have started coming to work already. We expect to get a larger workforce coming in gradually towards the end of this year. Eventually, it can be 80% of our workforce coming in 2022, 60 in 23, 40 in 24, and 25% by 2025. And that's how we will realize our vision of 25 by 25. But normal first, new normal next, and that is the pathway we'll take it there.
But if I look at your total hiring, the fresh offers in last 4 quarters is at about 75,000. It has almost doubled. Is that in line with your company philosophy, where you will keep on hiring at the lower end so that even if there's attrition in the middle layer of TCS, new employees and low costs will ensure that the aggregate cost does not go higher? Is that a conscious philosophy which you're working on, or this is just my observation?
Our larger intake is a result of primarily because of higher demand. And some of it is because of larger attrition. That is how it is, and we basically continue to, because of the higher demand, I expect these numbers to continue. Means, like I said, we will hire another 35,000 trainees in this year itself, and then continue the trend in the coming FY23 and follow on. So this demand trend is definitely driving this to a large extent, and with our like I said, with our robust model of acquiring talent from the campus, high energy people coming in and putting them through our talent development machinery, creating a significant results for us, and it's a kind of a foundation for all our execution.
So Milind, you've had 75,000 new employees this year. When do you think you would be able to reach the mark of 10 lakh employees for TCS? I'm not asking you for any formal guidance, but I'm trying to understand that what is your understanding of the talent requirement is.
Point is, we are focusing on how we basically build our business. How do we basically bring in new services, new markets, newer customers, and obviously, significantly focus on growth and transformation. All of that will need obviously significant number of people, and whatever it takes to do that, we'll deliver that. So I'm more focusing on where do we do from a business standpoint. What happens to the number of people in term is a outcome of how we grow and what is the pattern of that growth.
Well, it gives me great pleasure to bring on board Rajesh Gopinathan, CEO and Managing Director of TCS, to talk about how things have transpired for TCS and for the shareholders of TCS for the quarter gone by. Rajesh, it's been a fantastic quarter for the shareholders because TCS has touched a market cap of $200 billion, and congratulations, your term's been extended by another 5 years. So it's just been one of those great quarters for shareholder and a great endorsement for a professional manager like you coming from the board.
Good morning, Nikunj, and thank you for your good wishes. Very happy with the overall performance and the confidence that the board has reposed in us and extending our term. So thank you both to you and to all our stakeholders.
Rajesh, while in the near term, markets may have their own opinion on how one should look at the quarterly performance of TCS, what I want to revisit is something what you alluded to exactly a year ago, which is that a multi-year cycle for the IT industry has started. Has that trend only got endorsed further? Because the minute I look at the deals which are announced by TCS every quarter and the deals which are available in terms of the source-based information, looks like this trend is only getting accelerated.
Absolutely, Nikunj. The trend that we called out on, the multi-year cycle of technology upgradation, is something that is gaining conviction and becoming more and more broad-based. And that is reflected in our own numbers if you look at it. The kind of deal wins that we're seeing, the spread of it across markets and across industries. And even more importantly, if you look at the growth across our customer universe, almost every segment of customer by revenue size, we have been able to add customers. So the number of customers from whom we make more than 100 million a year has gone up by 4, and so on and so forth for the 50 million, 10 million, 1 million, every single range. So this is what we have been talking about, that it is a multi-year cycle and it is going to be all-encompassing, and it will touch each and every part of our customer universe. And that is now starting to come into play. And we are very encouraged by the signs that the way this demand trend is becoming broad-based.
Rajesh, let's take the clock back. Exactly a year ago, like I said, you called, or TCS management called for this multi 3-4 year cycle. Has your visibility for the scope of the cycle and the acceleration of the cycle and also the size which has opened up in last 12-18 months, has that confidence only become better? Are you feeling much more confident with each passing day?
elongate?
I would agree wholeheartedly, Nikunj, because even areas like North America, BFSI, retail, and if you look at the kind of investments that are going on and the kind of shift that is happening, each of them are part of fairly large, large duration projects. So the projects themselves might come in smaller parts, but they are all of the nature. So if you look at retail, in fact, retail, manufacturing, all of them, significant amount of supply chain transformation going on. Across all these plus BFSI, significant amount of transformation going on the customer experience and overall ability to increase the interactivity with the customers and have a rich, persistent relationship with them. The core transformation that requires a realignment of internal systems to make them more amenable to ecosystem-wide integration so that they can participate. In the case of BFSI, whether it be with fintechs, in the case of other areas like manufacturing, their ability to actually participate in the whole extended case EV ecosystem that is coming around. Each of these are very large duration projects that are getting triggered. And you will find that reflected in the anecdotal wins that we have shared and the go lives that we have shared across the entire spectrum. We are seeing people coming in from logistics, people from semiconductors, from shipping. So there's a very networks, CMI. So a very large scale cross-industry transformation that has got triggered. And this will definitely support demand visibility.
Let me also bring on board NGS. NGS, congratulations, your term is also extended by 2 years. But NGS, I'm tempted to ask you the obvious question. The obvious question now that Air India is back with the Tatas, for TCS per se, how large could be this business? Because the Tatas will now have to spend a serious amount to really rebuild the entire tech architecture of Air India. For TCS individually, how big is this?
Good morning, Nikunj, and I think it's a great opportunity. And we have a tremendous footprint of working with airlines across the world, phenomenal amount of assets and skill sets and journeys that the airlines typically adopt. The onus is on us to go and pitch to Air India and win their mandate to be their growth and transformation partner. I would put it this way. Like any other group company, I think we will have to earn it on merits and be assured that a team is working on it, and then we will go and pitch for our rightful share of what we can do and how we can, more importantly, improve customer experience and the efficiency of the overall systems, etc., to Air India.
How large could be this business, NGS? I'm trying to understand that could the Air India business, if it comes your way, could it change the fortune of TCS India business?
It has the potential to do so. But then, it is very hard to actually go and estimate and put a value on it. And we'll have to understand their footprint and we'll have to work with them to shape this, which is what we will focus on from here.
Rajesh, when I look at the deal environment, there are a lot of deals now TCS is getting which are domestic facing in nature. These are large deals, these are transformational deals. And looking at the way how things are moving for the Indian economy, are we in for a very solid and a strong surprise for TCS India business? The US business and the European business is still very large, but are we in for a big surprise coming from this business also, given the way how TCS is winning deals here?
Because in our business, it is unlikely that one single thing is going to spurt and create a very significant movement. Yes, definitely there are a few large deals when seen from the context of the local market in the pipeline. And if some of them come to fluctuation of the size there, it would be meaningful for the local market. But it's not something that to be overexcited about because our business is much more on the ground downstream, and it goes through the investment cycle rather than being very front-ended on an investment cycle. But the optimism that is there gives us confidence that the next, there should be a series of these coming in.
Rajesh, one of your peer companies told me that the talent crunch is so strong in the IT industry that they almost decided of putting up a board in their campus that trespassers will also be hired. How are you dealing with this kind of a demand crunch? Because it's extraordinary the way talent and the requirement for fresh talent is coming.
Nikunj, we have been, to some extent anticipating this for quite some time. We were the first and the leading company at the time of the downturn to take a very supportive stance on our employees and to go on record saying that we will not retrench because we believe that it is a passing phase. And we stayed away from that, from the easy path of retrenchment to fix the short-term problems. And that has been a major boost for us in terms of trust with our employee base and the reaffirmation of our overall employee-friendly philosophy. The second big aspect of it, of course, that you are very familiar with is our continuous investment in retraining and upscaling of our employee base, which is the best way to actually meet the kind of demand that we are seeing. And the third has been that we, in line with what we had spoken to you about the demand trends about a year back, we have significantly upped our campus hiring program and increased that manyfold compared to where it was earlier. So we, rather than go back, we committed to bring on board and honor every single offer that we had made during the pre-pandemic and during the pandemic period. And into the pandemic period, we actually significantly increased our fresher hiring, which is all coming onto our, into our company now. So all three dimensions, right? Doubling down on our employees at the worst period of the pandemic time, significantly increasing in retraining, and betting our call on the demand visibility that we had to increase our campus hiring. These are all part of the proactive, forward-looking talent management practices that we have always been leaders on, and that should stay us in good stead. We will tactically, of course, remain agile to deal with the current spurt, but I believe that our philosophy and our history of staying true to this philosophy will put us as the best and the most desired talent destination for all employees who are out there.
I just want to bring this point out for our viewers that I've had the pleasure of tracking Infosys for TCS for over 20 years now. And one extraordinary thing about TCS is that in the downturn, they've not believed in attrition. They've always invested in their workforce. They've always made sure that you bet on internal employees, whether it was this change between change of the digital architecture or when the pandemic problem was at its peak. Rajesh, I'm going to extend the timeline, and I know how TCS thinks. Like I said, that I have a pleasure of tracking TCS for nearly 20 years now. Internally, have you started planning that how soon TCS will be will have a 1 million workforce? Because if you're hiring 75,000 to 1 lakh, I'm sure that 10 lakh mark would be achieved very soon for TCS.
Because specifically that number is not something that we have tracked, but we do, have been planning that how do we continue to maintain the culture and the agility in our organization and to make sure that it is scalable. And again, along those lines, many of the actions that we have taken are very visible, and we have spoken about that multiple times. Prime among them is to structure the company into a series of self-contained, autonomous kind of organizational units, which we now have more than the range of about 150 such individual groups that manage their teams end to end and feed off each other and feed off the common supply chain that we have. But TCS at its heart remains conglomeration of small individual teams with a very common shared value system. And that is something that we believe is key to our ability to scale. And that architecture is unlikely to change anytime soon.
NGS, it's not for the first time we've seen a boom in the IT sector. There was the Y2K boom, there was an enterprise boom, now there is a complete boom which you could call as a cloud architecture boom. How is this boom different from the previous boom we've seen? Because historically the IT sector booms have lasted for 2 to 3 years and then demand tends to drop. Are we in for a different kind of a scenario this time?
I think so, Nikunj. I think what we are seeing in the cloud transformation journey is probably the tip of the iceberg, or we are only scratching the surface. There is so much more needs to be done, because here is a technology where every day something new happens in this area for the better, and the cloud itself is coming up with the newer tools, newer opportunities, newer ways of connecting, newer methods of building algorithms, and so on, so on, so on. All this means that it's going to be an integral part of your business applications, and more of the business is going to be integrated into the cloud, right? So in that context, what we see is certainly a multi-year growth opportunity in the cloud area. And more than that, I think, this coupled with the realization that location independent agile is something here to stay, because people have realized that during the pandemic, everybody worked remotely from wherever they considered safely and still came together and delivered significant value to the business, whether it is on the efficiency side, on the resilience side, or on the transformation side. What does that do? Means that essentially the co-located concept of agile is gone, dead and buried, and grass all over its grave, right? It's clearly, people have adopted location independent agile, which means that irrespective of wherever people are, they are able to contribute together. And that significantly reduces the cost of doing business, cost of building new systems, because people from a low-cost location, high-cost location can all come together and deliver value, which means that there is more for less to be done. And that is the growth momentum that you see in the marketplace.
Rajesh, before we wrap, FY22 is a year of normalization, where the base effect cannot be viewed given that we had pandemic last year. But for FY23, it's not a forward-looking guidance, but just to get a sense of what you're thinking. Are you confident that on a large base also you would be able to maintain industry-beating growth rates?
Absolutely, Nikunj. Again, as I said, with the caveat that this is not about putting a number or any forward guidance, we are confident about the demand outlook, and we are gearing ourselves up for that, whether it be in terms of capacity, whether it be in terms of investments on capabilities and our offerings portfolio, and the kind of partnerships and ecosystem relationships that we are creating. So we do believe very strongly in the demand over the medium term, and we are gearing ourselves up completely for that.
Before I wrap, NGS and Rajesh, let's capture a photo opportunity. TCS is now a $200 billion company. As member of press, as someone who's covered TCS, it's been an absolute pleasure reporting the journey from the day it got listed, to the kind of shareholder wealth it has created. And I sincerely hope that this is just the beginning of a new growth era for TCS. When we debate and when we argue that which could be India's first $500 billion company in India, I certainly feel that TCS has one big shot at it. So let's capture this moment. TCS now a $200 billion company.
Thank you.
And in keeping with your new role, it's also
engaging with
Manish.
much more of you in coming quarters.